I hope everyone is well and ready for our session for today. We will be looking at non-residents for this evening. Just to get an understanding from you guys, what do you guys think is the reason for us to have tax for non-residents, for people who are not residents of South Africa? Any takers?
From my understanding, you might be a non-resident but still have business activities within the Republic. So hence they have to be taxed even though they're not resident.
Absolutely correct. So we want to encourage people to come and trade in our country and to have business activities in our country. But at the same time, that means they're also using our resources, excuse me, our resources to make that income. So it wouldn't be fair if we just say that people from overseas should come and trade here, but we don't tax them for the people who are resident in South Africa. So as much as we encourage people to come in and trade with us, we want them to also pay their fair share of taxes, right? So what section of the Act tells us that we need to tax non-residents? What do you guys think? What section would we look at? What section would we look at to tax non-residents? Let me give you a hint. It's the same section that we look at if you are a resident, if we want to tax the income.
Will it not be the section on gross income?
Yes. So we will look at our definition of gross income in Section 1 of the Income Tax Act. Thank you. I think it was Nozipho, ne?
Yes, it was Nozipho.
Okay, thank you for that. So we will go to the definition of gross income, right? Paragraph 2 of the definition tells us that we will include any income or that they receive as long as it's a South African of a South African source. So as long as they receive the income from here, then we will tax them, né? But we know that the income tax, the gross income definition tells us that only income that is not of a capital nature, right? So looking at the capital nature, we'll look at it as another section for that. So we'll discuss it just now when we look at the source rules in terms of Section 9. And also, yeah, so we'll look at that just now. So if now the income is subject to a withholding tax, we need to look at that, because if in most cases, if the taxpayer has already paid a withholding tax on it, we would exempt them when it comes to assessment stage, né? But obviously we'd have to look at the specific rules in the Income Tax Act that would apply to that specific exemption. But if not, then we would consider any other exemption that is applicable to that specific income. So let's look at interest, for instance. The interest would have withholding tax of 15% if the person is an individual. But now there are terms and conditions that apply with that withholding tax. And then that person who would have had the withholding tax would be allowed an exemption in terms of Section 10(1)(h). But then if they don't meet the conditions of 10(1)(h), then they will revert back to 10(1)(i), which is the normal interest exemption, the 23,800 or the 33,000, depending on how old you are. So we need to also look at the fact that, is there withholding tax? What are the rules that come along with the withholding tax? Would there then be an exemption because that person has already paid the tax on it according to the specific section in terms of the Income Tax Act? And then if now there's no exemption that is applicable, then we'll need to look at if there is any tax treaty, any double tax agreement that South Africa has with the other country that that person is a resident of. So whatever the tax treaty or the double tax agreement between the two countries say will override what the Income Tax Act says. So we need to look at all of that. So if our double tax agreement says that the money that this person who is a resident of the USA earned while they're in South Africa needs to be taxed in the USA, then we will have to let the person be taxed of the amount in the USA, and here they would have the benefit of not being taxed on the amount. So those are the things that we need to take into consideration when we are taxing non-residents. So it's not just the black and white, we tax you just because you came into our country, but we also need to look at any specific withholding tax rules that would have applied, any exemptions that would have been applicable to them, and also any tax treaties that will apply to the income that they received. Okay. So Section 9 tells us our source rules, right? It tells us if now the person received a specific income in our country, how do we tax that money? So we have different types of incomes that the person can receive while they're in South Africa, and then we can look at the exemptions that will apply. So for instance, Section 9(2)(a) tells us that if the person has dividends, we need to look at the residency of the company that's giving the distribution, and then that's how we would determine if the source is from South Africa. Ne? So if the company that is giving the distribution is a resident of South Africa, then we would deem that income to be of a source of SA. Then we would also look at our Section 10(1)(k) exemption, because we know that the dividends that is distributed from South African companies normally would have had a withholding tax so of 20%. So we would not want to tax the person twice on the same amount, and that's why we give them the exemption in terms of Section 10(1)(k). Then the person could have interest, and then Section 9(2)(b) tells us that the interest that is paid by a resident will be deemed to be from a source within SA. If the funds were used and applied by the person in SA, then we would also deem it to be of an SA source. Then we need to look at Section 10(1)(h) exemption first. There we would say we need to look at two things. If the person spent 183 days in SA, or they carried on a business, then Section 10(1)(h) would not apply to them. They would not have the exemption, because that exemption says we will fully allow your interest income to be exempt. So it wouldn't be limited to the 23,800 or the 34,500. So if the person does not meet the terms and conditions of 10(1)(h), being the 183 days, spending less than 183 days in South Africa, and not carrying on a business in South Africa during that 12-month period, then they would then qualify for 10(1)(h). But if they don't qualify for it, they still have the relief of Section 10(1)(i), which gives them the exemption of the 23,800 and the 34,500. Then we also need to take into consideration that whoever pays the non-resident the interest may have applied a 15% withholding tax in terms of Section 50(b)(1)(a). So if there was a withholding tax, you also need to take that into consideration if you are calculating their taxable income at the end of the year. So that would then form a credit on their behalf, because they would have paid 15% of withholding tax on that amount of money. Okay. Then we have royalties, and those are deemed in terms of Section 9(2)(c) and D. There they tell us that if the royalties are paid by a resident of South Africa, then it's from a South African source. The intellectual properties are being used in the Republic, then we will deem it to also be of a South African source. Then if there's there will be an withholding tax of 15% on all royalties that are paid. So then they'll also be exempt from income tax. Then we will look at our scientific, technological, industrial, or commercial knowledge or information. So if that person was being paid in respect of those services being rendered, we would look at section 9(2)(e) and F. There it tells us that if it's paid by a resident, all those royalties for those scientific knowledge or information will be subject to a withholding tax, and that will then be exempt from income tax. So looking at the material that you guys have to cover, if I'm not mistaken, I think the withholding tax, you don't actually need to go and know the sections for it. So it's just one of those, it's good to know. It's just a good to know information for you guys. Then also, if you are a public office, if you hold a public office and you rendered services in relation to the public sector, then you would look at section 9(2)(g) and H. The amounts that person would have had to have received that amount if they are appointed in terms of an act of parliament for local sphere of the government, public finance management act, public entity or municipal entity. So there we would also look at the salary of any government official but not ordinarily resident in South Africa are exempt. This is supposed to be 10.10, not 1. There we go. Sorry about that. We would need to look at that exemption where if you're a South African resident and you went and you provided a service outside of the Republic, then there would be an exemption. So this one actually applies if you are the other way around, a South African resident, and you went overseas and you were rendering a service for a South African company in a different country, then there may be an exemption in terms of 10.102, and you need to look at the specific rules that apply for that. Then our lump sums and annuities, we would look at 9(2)(i). This is for services rendered within the Republic. So if the foreign resident or the non-resident rather was employed by a company in South Africa and they provided the services within the Republic, then there would be tax in terms of then the source would be deemed to be South African. There is no exemption for that one. They just provided a service, so that's it. And then section 9(2)(j) tells us that if the amounts received or accrued in respect of disposal of immovable property in South Africa, then we would look at the property that's being disposed. Is it within South Africa? Then if it is, then we would tax it here in South Africa. There is no exemption. However, there is a withholding tax that would have to be withheld by the South African resident who is purchasing the fixed property from the non-resident on the disposal that is more than 2 million, or well, from 2 million. And then that's in terms of section 35 cap A. So with that one, there won't be an exemption, but there will be a withholding tax. So at the end of the year, when we do our assessments, when it's time to file at SARS, that withholding tax would also be included as part of the non-resident's tax calculation, and then they would then give them that credit that would have been paid already by the resident on behalf of the non-resident. Okay. Then we have section 9(2)(k), which deals with the source rules for the amounts that are received or accrued in respect of disposal of movable assets. If we look at the residence of the seller. So in this one, we need to make sure that the property, where is this property being utilized? Is it going to be in South Africa, then it's going to be of a South African source. There is no exemption with regards to that. Then Section 92L deals with exchange differences. There we would look at if the exchange item is connected to a permanent establishment in the Republic, then the source would be of a South African source. There is no exemption for that one. So those are our source rules. That's Section 9. It tells us how we will determine the source of the income that we are receiving or the non-resident is receiving. So if there isn't anything or there isn't a specific section that applies to the income that the non-resident receives, then you need to look at your common law rules, which is your court cases. So there you would look at court cases like the Lever Brothers, where the test there is we need to look at what is the originating cause of the income. That's the principle that we got from there. What is the originating cause of that income, and where is the originating cause location? So what that actually means is we would look at where did we give the services, for instance. Were the services provided within the Republic? If they were provided within the Republic, then that is. So when we are answering questions in the exams, or if we have a client who is from overseas and they are asking us for advice, we would then explain using our Section 9 rules and also looking at our court cases and using the principles that come from the court cases. Are we happy with regards to how we determine the source of the income? So now we'll look at a question and see how is it that we would calculate the taxable income of someone who's not a resident of South Africa. You're going to have to engage with me and you're going to have to speak to me because I like speaking to you guys, so you must speak to me. So here's what is required from us. It says calculate any normal tax after rebates and tax credits payable and any applicable withholding tax payable to SARS for the year of assessment ended 29 February 2024. The person is 45 years old, unmarried, has never spent more than 2 weeks in South Africa during any of the past 10 years. He has never lived in South Africa except for 12 months, 20 years ago, and he did not carry on any business in South Africa during the 2024 year of assessment. So the required is that we need to calculate the normal tax after rebates, credits, and any applicable withholding tax, right, for the 2024 year of assessment. So then they tell us that the age of the person. Why is it important that we know the age of the person?
For rebate?
Correct. I didn't see who that was.
Sorry, it was Anisha.
Okay, awesome. Thank you, Anisha. So we need to know the age of the person for the rebate. So this person would qualify for which rebate?
Primary rebate.
Yes,
Primary
correct.
rebates.
Why do you sound like you're not sure? You're correct. So
I came to the class late. So
no, it's fine. This is your prior knowledge that you already have from the basic teachings that you already went through. So you would apply the primary rebate for this person because they are younger than the age of 65. Then they tell us that this person is unmarried. Why would it be important for us to know that the person is unmarried?
Well, let me try, because certain income, like rental income, has to be split between if the person is married, in community of property, for example, it will need to be split between the two.
Okay, awesome. So is it just rental income? What else can we divide into two?
I think interest, I can't remember.
Awesome. So we would look at your interest income, your rental income, your dividends income. So we can say our passive income, right? So the things that would form part of our joint estate would then be divided between the husband and the wife. So in this case, this person is not married, so we don't need to stress our minds about dividing it into two. Okay. So fun fact, when you actually do your returns, you do not actually have to do that divided by two. The SARS system will divide the amount by two. So you don't actually need to do it for yourself. But when you're doing it for your exams, you will have to do it. You would have to show the step that you would divide it by two. So then they tell us that he's never spent more than 2 weeks in South Africa during any of the past 10 years. And also he did not carry on any business in South Africa during the 2024 year of assessment. Why is that piece of information important?
Hello.
Hello?
It's for the physical presence test.
Mm-hmm. Awesome. That's also true. So what about the physical presence test? Why would it be important? What does the physical presence test tell us?
Whether or not he's considered a resident for that time period, I think.
Yes, that's correct. So if now this person is then deemed to be a resident because they were physically present in in South Africa during this year of assessment, looking at those conditions that are there, the 95 days, current year, so you would have to look at those steps, right? So if now the person is deemed to be a resident of South Africa, what would change?
They would be taxed on, I think, worldwide income, or the income that, yeah, I think that's what I think. And if they were not, then they would only be taxed on the source based, so the one that is derived from the South Africa.
Correct. So we need to know that is important. So in this situation, we don't have to worry about the physical presence test. What else? There's another section that we need to think about when it comes to carrying on a trade and the amount of time that he's been in South Africa.
Is it the exemption on interest?
Correct. Thank you, Tebogo. Yes, I'm assuming it's the because it says the on my screen. So yes, that's correct. It's important for our exemption in terms of section 10(1)(h). Remember, we said that exemption would only apply if the person spent less than 183 days in South Africa and they did not carry on a trade. So that exemption is the better of exemption. Everybody would like to have that exemption because that means all our interest would not be taxed. Okay, awesome. So already we know what to look out for when we are answering our question or when we go look at the background or the information that is provided with regards to the person, because we've already started thinking what could possibly be applicable. So when we are writing our exams, we can already start making the mental notes for ourselves, or we can write it down on the paper so we don't forget why this information is specifically important for our question. Okay, so let's look at the information applicable. They tell us that the following income was earned by a non-resident person for the 2024 year of assessment. Excuse me. They tell us that they received net dividends earned from a South African company listed on the JSE Limited. The amounts represent the actual dividends received after the deduction of South African withholding tax of 15% of 15,000 Rand. How would we include the net dividends in our gross income calculation? Would we include it as 85,000 Rand, or would we include it as the full amount, including the 15,000 Rand?
I think it's the 85,000 in full, and then showing the withholding tax as a deduction later.
Okay, so is the 85,000 our full amount, or is it the net amount?
It's net.
Yeah, I think it's net.
Yes, so it's the net amount. So this is how we lose our marks when we're answering our questions, because we are quick to read, but we don't understand what the question is actually saying to us. So when we are including the dividends, we would include it as the full 100,000, because we want our gross income in our, so we want to declare the gross income. So it's the full amount. Gross means the full amount that you actually got. So we will include the 100,000 Rand. So it's the 85,000 plus the 15,000 Rand, which is the 15% withholding tax that we would have to then declare as part of our gross income. Okay, awesome. Then there would be an exemption. How much would the exemption be for? And what section would we then use to declare or to exempt the 100,000 Rand, or the 85, or the 15,000, whichever one? You guys tell me, how much will our exemption be?
No, for the non-resident is fully exempt.
Okay, awesome. But is it only for the non-resident?
Okay, no.
Okay. So what section would we be using to show that this amount is exempt?
Hey, for now, for me, it's just section 10. I will work on the other subsections, but yeah.
Okay,
Section 10H.
Section, oh, sorry.
Who was speaking now?
It was me.
Who's me? Say your name.
Sorry, Mary. Sorry, Marian. Sorry, Marian.
Okay, what section did you say? Section 10.1?
I'm second guessing my answer.
I didn't hear you, that's what I'm asking.
No, it's fine. You didn't hear. I said section 10H, but no, I think
Not quite there.
Isn't it section 10.1, paragraph K?
Correct.
Oh.
Thank you. Who was that?
Miriam.
Miriam, yes. Thank you, Miriam. That's correct. So we would use section 10.1K to show that the amount is exempt. We want to show both. We want to show the income being, the gross income being included, and also the exemption portion as well. So we would also show that as part of our calculation. So even though the dividends will not actually be taxed, it will be zero. We want to show both the inclusion of the gross income of 100,000 Rand and then the exemption of the 100,000 Rand in terms of section 10.1K. Okay, awesome. Then we have interest on savings account. It's from South African government bonds, not a tax-free investment. What would we do there?
I think we'll exempt it, the interest.
Using what section?
I think it's section 10IH.
Is it I or 1?
1H.
Okay,
Because there
awesome.
would be no withholding tax of 15%. I think so.
Okay, you are right with the section there. We'll come back to no withholding tax score there.
Okay.
You're correct with that as well, but what section speaks to the no withholding tax?
Oh God, it's section not. I can't remember it. Yeah, I forgot it.
So for your answer, you would have gotten the 1 mark for saying that it's going to be exempt, but you would have lost out your mark for the section for withholding tax. Because now you need to tell them, remember they said in our question, we need to give them any applicable withholding tax payable to SARS. So you would need to tell them, in this situation, there is no withholding tax. There's no 15% withholding tax in terms of Section 50 Cap D. So we also need to take that into consideration when we are doing our calculation, the withholding tax rules. So we would include the 65,000 Rand as part of our gross income. Then we would exempt it in terms of Section 10(1)(h), because that is the better exemption, because you can exempt the full amount instead of the limited to the 23,800. We can exempt the full amount in terms of Section 10(1)(h). Okay. Then, because our question wanted us to address any withholding tax, we would then explain that there would be no withholding tax of 15% because of the rules in terms of Section 50 Cap D. Okay. Thank you, Cindy. That was a good attempt. But just remember to include all your sections that you need to get all your marks. Okay. Perfect. So then they tell us that the person received net taxable rental received on a property situated in Cape Town, South Africa. The amount is 240,000 Rand. What would we do with that?
I'm scared to say.
No, don't be
Well, the rental income is from a South Africa source, right? Because it's from the property in Cape Town. But I think it will be included in its net. So I think we would have to. I'm thinking include in gross income.
Yes. Yes, you're correct. Now you're cracking your brain, because up there we said then this is net, we need to include the gross. With this one, you wouldn't be able to calculate the gross amount. You don't know what the expenses were.
Yeah.
Either way, you would have still allowed the person the deduction of the expenses, so that you can determine the actual income that should be taxed. So in this case, they just gave you, this is the net after we've taken into consideration all the deductions that this person would have been allowed in terms of Section 11A, for instance, or 11D for repairs and maintenance. So this is what you got. There's nothing you can do with this information. So you just accept that there's a 240,000 Rand that you're going to include. 240,000, yes, I did say the right amount. 240,000 Rand that you will include as part of the person's gross income in terms of section paragraph 2 of the gross income definition of Section 1. Okay. So all of these things are being included in terms of the gross income definition, paragraph 2, because paragraph 2 is the one that tells us, look at the source. That's it. Then,
can you please repeat the section? Sorry. Can you just please repeat the section?
Oh, okay. It's paragraph II, so that's paragraph 2 of Roman 2, yeah, Roman 2 of the definition gross income in Section 1. Hi, Tebogo.
Hi. I'm sorry. Can we go back to the interest on savings account? I'm not sure if I got it right.
Okay.
I heard you mentioning something to do with the withholding tax of 15%, and I thought
Yes.
the holding tax was only affecting the 85,000.
No.
Were you just, yeah?
Okay, yes. Continue. I'll explain now.
No, yeah, and unless if you were now just extending the question that in case there's a 15% withholding tax, did I miss something there?
Okay, so remember our required tells us that we also need to include any applicable withholding tax payable to SARS. So in our question, we also need to address the withholding tax So here they've already told us that they've already paid the withholding tax, so we don't actually need to replace it. But here we need to give him. Oh, okay. Are you sorted?
Oh yes, I'm sorted.
Okay. So what's the section for the withholding tax for the interest?
Section 50. I'm bad with the subsections, but yeah, 50B or yeah, I'm not sure.
Capital letter D.
Okay.
Yeah.
Thanks.
So that's the one that you would use for the withholding tax. So that's the one that would tell us that there would be no withholding tax because it's from a South African government bonds savings account. So there wouldn't have been any withholding tax on that one. Okay. Then they tell us that the person had a net taxable rental received on a property situated in the USA, and they received 120,000 Rand on that amount, on that rental. What would we do with that? And what is our section? Come, guys.
Do we not not include it? Like we don't include it?
We don't include it. And what is the reason for not including it?
Because it's not from the source. It's worldwide income, I think.
Okay.
So that's what I thought.
So your basis is that it's not from a South African source, né? So then what section are you quoting?
Sure. Yeah. No, I don't know.
I also wanted to say that we shouldn't include it in the gross income because it's from a source that's not in the Republic. But with the section, I'm also unclear with that one.
Okay, awesome. So you guys are both right. Our section, guys, it's a beautiful section. This thing, paragraph 2 of the gross income definition in section 1. So that's our section that says either we will tax or we will not tax, because that's where we find out that if it's from a South African source, we will tax it for non-residents. So if you wanna, that's the easiest way to remember it. That's the one that tells us about our taxing rights. Okay, Magdalene, was it?
Yeah, it's Anisha. Please use Anisha.
Anisha, okay. Sorry. I saw Magdalene first. Sorry.
Anisha. My question is, you see the sections, ne? How would you advise us to, to know these sections? Because I know that I understand they're important. Because we might be able to answer, but without the section, we lose marks. How best, just a tip for us.
I wish I had a tip, Claire. Oh, when I was in your shoes, I also couldn't remember. So for income, it's always gross income. You always start at gross income definition. Expenses, section 11. And then allowances, we would look at section 11E, our 13s and the 12. Exemptions, we would look at section 10. Our source rules come from section 9. I don't know how. Write it down.
I'm writing down and it sounds like it can work. No, honestly.
So, the thing is, like, everybody has a different learning style. So someone like me would have to write it down so that I can remember the information. So it depends on your learning style, I guess, and trying to find a pattern so that you can remember the information. I don't know how to help. Does
No,
it
but
make sense?
the way how you said income, the section, allowances, exemptions, sources, it really does help. Because now you know, you have an idea. Okay, now you know section 11 deals with this, section what deals with this. Even when you go through the sections, you know, like it makes more sense now for me. So I'm going to go back and do it this way. Thank you.
Awesome. I'm glad I could help. Okay. So then the next item of this person's income was the taxable capital gain, correctly calculated from the sale of a holiday apartment situated in Cape Town. The proceeds with the disposal were 4 million rand. The capital gain, the taxable capital gain was 440,000 rand. How do we treat this one? Come, guys. How do we treat the capital gain?
I think, okay, so since we have a taxable cap gain of 440,000, don't we proceed to do the I'm not sure, the annual exclusion, and then we also get the inclusion rate, then we add, and then we put that into our gross income.
Okay. Yeah, no. That makes sense. Had they said to us capital gain, then you would have had to do the annual exclusion, the inclusion rate of 40% or however much, depending if it's an individual or, you know. But now in this case, they tell us it's the taxable capital gain. So that means they've already done all of that for you. Now you just need to take that 440,000 and go and plug it into your calculation. That's all you need to do.
Oh, okay. All right. Thank you.
Yeah, I think we are going to include it because this amount was generated from Republic.
Awesome. So that's also correct. Is there going to be an exemption for this?
There's no exemption for this one.
Correct. And then remember in our question they asked us.
May I ask a question?
Yes.
In the definition of gross income, it specifically states that we should include. Let me just look at it. Is it? Let me just look at it, and then I'll just get back to you. Something that has to do with capital nature. Is this one not of a capital nature or something like that?
Okay. So you are saying.
Is it not we should exclude receipts of a capital nature? Is this one not a receipt of a capital nature?
Yes, you're correct. You're 100% right. I'm going to look for the section now. And now I didn't even write it down when I was doing the answer. And this can't be correct. This is wrong. I think it's section 26 cap A that tells us that we need to include capital gain into our gross income. Let me have a look. 2 seconds. I don't know everything off by heart. You see, even me, I have to go back and check in the book. Okay, yes. So 26 cap A is the one that tells us that we need to include it for capital gains. And then it refers us back to but now my concern is we know that the non-residence rules are found in terms of section 9 that tells us, oh gosh, here we go. Section 9 is the one that tells us where the disposal.
Can you please explain what withholding tax is? I kind of have a problem with that term.
Okay, awesome.
When you are done, thank you.
Perfect, I'll do so. Let's go back to Tepo. It was Tepo next.
Yes, it was Tepo.
Okay, awesome. So I'm gonna go back and make 100% sure which specific capital gains rules would they or section would then be applicable. But from my head knowledge, Section 26 Cap A is the one that applies and refers us to the 8th schedule for calculating any capital gain. Yeah. So I'll just confirm that part, and then in our next session, or I'll send an email, and then it will be forwarded to you so that you can know the answer. Is that okay?
Yes, yes, it's okay. Thank you.
Awesome. Thank you. Then going back to Zinhle's question, withholding tax. Okay, so what happens is, for some transactions, or for most of them rather, what would happen is when a person who, in this situation, is a non-resident, comes here and has a transaction with us, a South African resident, SARS says, okay, what are the chances that that person is going to give us our money at the end of the year when it's time for tax season? They won't come back and be like, oh, SARS, I sold a property, I'm going to give you your money now, so here you go. What then SARS has tried to put into place so that they can get the money when the transaction happens, they said, you, who is the resident of South Africa, we expect you to withhold, take some of the money that you're going to pay that person. Take the 15%, for instance, for the interest income. Take the 15% and come and pay it to us. Give the person less the 15%.
Okay.
So withholding tax is actually, if you, Zinhle, are from the USA and I, Dineo, from South Africa, you come and you sell me your house that you have in Cape Town, I must then withhold the 7.5% and pay it to SARS, then pay you the 100% less the 7.5% of the money, so that come when SARS is supposed to go and do assessments at the end of the year, they know that Zinhle actually sold a property, and that's how they got the 7.5%.
Okay, thank you so much, ma'am. Very understood. Thank you.
Great stuff. Okay. So that is our solution. That's everything that we've just discussed. So the person will only be taxed on the 240,000 Rand and the gross income of 440,000 Rand. Then we would less our rebates. Oh, we would then calculate our tax on the 680,000 Rand. Using the tax table, and that would give us a tax of 181,879, less our rebate for the year. Then our normal tax payable will be the 164,644 Rand. Then the person would have paid a withholding tax on the proceeds of 7.5%, sorry, and that gives us an amount of 300,000 Rand. So this will then be taken into account when we are assessing the person at year end. So they would have actually paid us more than what they are due to pay us. So they would then be due for a refund because they paid us more than what they were supposed to pay SARS for that year. Okay. Does that make sense? Is everyone satisfied? Any further questions on that one? Okay, awesome.
Margaret,
yes.
there's a hand in there. Margaret?
Hi, sorry, I just wanted to ask, what happens with the withholding tax from the dividends?
So remember, they wouldn't have been taxed on the dividends. It's exempt. So the withholding tax would not be included as part of their credits. Everybody has to pay a withholding tax on the dividends, whether you are a South African resident or what you might call it, a foreign resident. With this one, they paid the tax of the 7.5% on the proceeds, but that actually isn't the true reflection of the tax that they were supposed to pay. So they ended up paying us much more than what they should have paid us.
No, I was just wondering because I know that we're showing the South African dividends at 100 and we've got the rebates of 100, but
Yes.
if they would have paid the dividends out, they would have paid out the 85. So then
Yes.
what happens with the 15?
The 15 is paid by the company to SARS.
Oh, okay.
Yeah.
All right. And we don't show that then?
No, we don't show that for
Okay.
them.
All right. Thank you very much.
Okay, awesome. Okay, cool. So let's attempt another question. Here we have George. They ask us to calculate his taxable income for the 2024 year of assessment. So here with George, we are only calculating the amount that will be taxed at the end of the year of assessment. Okay. George is 45 years old. He is ordinarily resident in the Republic of South Africa. The following information is applicable to the 2024 year of assessment. So this question, they want to see our reading skills again, right? So the question was actually combined as a resident and with a non-resident and a resident. So I just separated them for our example. But in the exam preparation questions that they have on the website, they actually included this as one question. So we'll see the second part of it just now. So here they tell us he is ordinarily resident in the Republic of South Africa. What does that mean? Please, anybody?
Ordinarily resident means that, does it not mean that he has will be spending a majority of his time here, or this is the place where he'd return to?
Okay, yes, those are the common law principles that we know. That's how we would define a person as being ordinarily resident in the Republic. Okay, that's true. But then, what does that mean for his tax affairs? How would he then do tax?
Most
Most of
taxed
his
on worldwide
income will
income.
tax.
There's
Okay.
Mulalo.
Okay,
There's Mulalo, do you know?
go ahead, Mulalo.
Hi, Tikiledi. Sorry, yes, I raised my hands by mistake. I actually wanted to type the answer on the chat.
No, you can tell us your answer correct now. Let's write. Let's
Okay.
Technology is
No, I
magic.
wanted to respond on this one where it says ordinarily resident. What does it mean? It means that the person is spending most of their time in that specific country. So in this case, it's South Africa. So when it comes to the way they're going to tax them, they won't tax them like the way they do tax us, the permanent residents here.
So how do they tax us as the permanent resident? I like how you're answering me, but you're not answering me. Mm-hmm.
Oh, okay. For example, let's say we are taxed 15%. There is a specific percentage that they're going to tax them instead.
Okay. There's another head who's gonna help Mulalo. Yes, Mulalo, I hear what you're saying. There's someone else who wants to help you here.
Would that not mean they're taxed on worldwide income, or all of their income is considered
Yes.
taxable and then exempted, I guess, depending on any exemptions or exclusions?
Correct. So we in South Africa, as South African residents, are taxed on our worldwide income unless there's a specific exemption that will be applicable for us to not pay tax on the specific amount. So Doesn't matter if my money comes from America, it comes from Japan, doesn't matter. As long as I'm considered a resident of the Republic, I will be taxed on every little penny that I get. Okay, so let's dig in. They tell us that this person received net royalties earned from abroad for a patent that was developed in the Republic for 60,000 Rand. How would we treat it? How would we treat our royalties? Yes, Margaret.
I think the full amount will be included in the income. The only thing that worries me is the net royalties. I'm not sure what the net royalties mean, because that's what got me the last time.
So in this case, you wouldn't even be able to determine what our gross royalties are. So in this case, we'll just assume that the net royalties are the difference between the amount that was received and any expenses that would have been incurred for that patent.
Okay, so it's correct in saying that you include the full 60,000 on the income.
Yes.
Thank you.
So then, with regards to our interest on an overseas bank account, how would we treat that? Anybody? Interest on overseas bank account?
It wouldn't be included.
Why? Who said that?
Sorry, Marian. It's not from a source in South Africa.
How much, Marian? Were you not the one who told me that if a person is a resident of the Republic,
it will also be included?
Worldwide income.
Oh my goodness, yes, it will be included. I guess.
Someone said I mustn't forget the royalties. Sorry, Marian. Someone said I mustn't forget the section for the royalties. So unless there's a specific inclusion, we always revert back to gross income. So in this one, there is no specific inclusion for royalties. So we must use our gross income definition. We would use paragraph I of gross income definition. Sorry, Marian. So let's go back to you, Marian. Redeem yourself.
No, sorry. So I think because it's worldwide income, I think you need to. Okay, sorry, and I'm using probably not the most taxable terms. You need to take it into consideration as in gross income, right? Because
yes,
it belongs to the person who's ordinary resident and they're taxed on worldwide income.
Correct.
Off the top of my head, I think it would maybe be exempt or excluded elsewhere, but it needs to be accounted for first because you can't deduct or exclude anything you haven't included in gross income.
Correct. So would there be an exemption on the overseas bank account interest?
No.
Who said no?
Bundle.
Why don't you sound sure? Yes, you're correct, but why would you say no? Why you say no? You sound like you're scared.
It's a no because we don't exempt on foreign interest.
Yes, correct. You're correct. So foreign interest is not exempt. So we would tax this person on the full 12,500 Rand. Okay. Thank you, Butle. Be sure of yourself. Be confident in your answer. So then the next one, they tell us that this person had a return from a fixed property collective investment scheme. This is not a tax-free investment. 100% is financed out of interest. So in actual fact that this person received interest income, okay, of 20,700 Rand. How would we treat this income? Speak to me, guys. How would we treat that 20,700?
I think it is part of taxable income But
Mhm.
the tricky part for me is when now there's not a tax-free investment and it was financed out of interest. Yeah.
Okay, so this being financed out of interest, um, what they're actually telling us is that from this fixed property collective investment scheme, you could have received the income from different um, streams. So maybe the investment scheme has rental income, it has interest income, it has dividends income. In this case, they gave us income that was financed from the interest income. So it doesn't have, so you would treat it as interest in your own capacity as well. So that's why they're telling you that 100% is financed out of interest story. Okay, does that make sense? Okay, awesome. So not a tax-free investment. What do we know about tax-free investments? How are they treated? So let's talk about the tax-free investments. What do we know about tax-free investments?
We
They
don't
are
get taxed on
taxable.
them.
They don't get taxed, but only to a limit.
Yes, two people were talking at the same time. I heard we don't get taxed on them only to a limit. What is that limit? And what is the section that speaks about tax-free investments?
Isn't the section 12 cap T?
Yes, correct. What is our limit?
I think it's 30 something thousand
30-something thousand is
It's
correct.
per annum.
36,000, yes. So you should only be contributing a certain amount, and you can only be, the interest income of 36,000 will be then you would then be exempt from paying interest on the 36,000 rand contributions that you would have made during that year. I think it's 300 and something, 360,000. I can't remember the limit for your life, but yeah. So for the year, you cannot exceed the 36,000 rand. So that's why they're telling you about the tax-free investment, because tax-free investments, you would be looking at a different section altogether. You would look at section 12 cap T, and you would also look at the rules that are applicable for tax-free investments. That's why they're telling you those pieces of information. Okay. Now I can't remember who asked why they're telling us those things. Perfect. So now they're telling us we have interest of 20,700 rand. So we have now established we're going to include that as part of our income. Then in terms of what section?
May I ask, and I think sometimes these are trick questions. I think the relevance of the fact that 80% is financed out of dividends, and dividends themselves are, I guess, are like non-taxable or not taxed. So now I'm confused as to whether the collective the return is now, because most of it is made out of a dividend, which wouldn't be taxable, if that now makes it non-taxable.
Okay, we're going to come to that just now. The 20,000 rand, we're going to come to it just now, ne? This one. We're going to come to it just now. We're going to discuss that. Marian, you and I are going to tackle it together. We're going to do it together just now. Let's go back to the interest that was from the fixed property collective investment scheme. So we're including the 20,700 rand in terms of action. If all else fails, we go back to our general definition of gross income, paragraph I or paragraph 1 of the definition gross income in section 1. If all else fails, we go back to basics. That's where we start, okay? So we would include this interest income in terms of our general definition of gross income. Then are we going to exempt it, and what section are we going to use? Is there going to be an exemption? Yes or no? What section can we use? Okay, 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 fine. Remember I said section 10 is where we start, ne? When we're looking at our exemptions. That's the general place that we look at our exemptions. That's where we start. So section 10(1) I is the one that tells us that we can exempt it, but limited to the how much is it now? 23,800 rand. Ne? So here's a trick of remembering the exemption for the interest. Interest section 10(1) I for interest. That's a hint, hint, dash, dash. Maybe it will help you remember. Okay. So we would include the 20,700 in terms of section of the general definition of gross income. Then we would exempt it in terms of section 10(1) for interest. Okay, cool. Limited to the actual interest that was received. So we would exempt the 20,700 rand. Then, Marian, let's go to our return from an equity collective investment scheme, which they also tell us is not a tax-free investment. Then they tell us 80% of it was financed out of dividends and 20% of it was financed out of interest. How do you think we can treat this amount, the 20,000? Are we going to apportion between dividends and interest, or are we going to just say 20,000 rand as a whole? What do you guys think? Yes, Margaret.
I think it's a 20,000 as a whole to start off with.
Okay. Okay. Why do you think that?
Because I think you should be taxed, or all your income should be reflected to begin with, and then you take your deductions and so on off at a later stage.
Okay. So our exemptions we would consider later on. Okay. Vincent?
I think we can take, because dividends are exempted, so that's why we only take 20% of, the portion that is financed by interest, okay. Because the other 80% is exempted because it is financed from dividends.
Okay, but isn't interest also exempt?
Interest is exempt at a certain, I think it's 23,800.
Mm-hmm.
So
yeah.
When we do the next part, because here we're showing a revenue, but when we look at, we start subtracting, we will subtract it if it's, below 23,800. Yeah. So it will Vincent, be fully exempted.
Okay. Thank you. I can hear you're an accountant because you say revenue instead of gross income, throwing away your tax terms altogether. Okay, so you're 50% correct in saying that we would show the 20% of the interest, but you also need to show your 80% of the dividends. So in order for you to calculate your gross income correctly, you need to identify the specific types of income that you have. So you would then say 80% of the 20,000 rand to determine my dividends portion of it, and the 20% of the 20,000 rand for the interest portion of it. So that later on, when you're doing your exemptions, you'll be able to then identify the specific exemptions that are applicable and for how much the exemption amount would then be. So in this case, 20% of the 20,000, I think, is about 4,000 rand, and then the remaining 16,000 rand would be for the dividends income. So when you're including it in your gross income, you would then separate the two between the dividends and your interest income. Okay. So then what sections exemption will apply for the exemption? For dividends, we would look at section 10(1)(k), and then for our interest, we would look at our section 10(1)(i). Okay. Make sense? Yes, no?
Okay, no, these sections, okay, you know what? There are just too much sections.
But at least we'll get the I one. I is interest.
Yes, at least you'll get the I. Another way you can remember the gross, the one for dividends, you would include your dividends in terms of paragraph K of the gross income definition, and then your exemption is in terms of section 10(1)(k) as well. So you can link the two Ks from gross income and exemption together, so you can remember it like that. Paragraph K, gross income for dividends, and paragraph and section 10(1)(k) for the exemption. Okay. Happy? Does it help? Yes, no?
Sorry, I just want to get clarity, ne? So on the 20,000, you saying when we include them, we'll separate them. So we'll the 80%, the 16,000, we'll include it as 16,000, and then the exemption will be okay. The 10 section 10 section 10, what is it? What did I write?
10(1)(k).
10(1)(k).
Yes.
And then the 4,000 will be interest, which will have its own exemption of the 10(1)(i). So they'll be separate. They'll be so it means in total there'll be 4 lines.
Yes. So our inclusion for our dividends will be in terms of paragraph K of the gross income definition in section 1, and then our exemption would be in terms of section 10(1)(k), and that's for dividends. And then for our interest, we would include it in terms of the general definition of gross income, which is para I of gross income definition in section 1, and then our exemption would be in terms of section 10(1)(i). Great stuff. Okay, thank you. So then they tell us that this person, George, received directors emoluments, I still can't say that word, emoluments received from a non-resident company. So for services rendered as a director, all meetings were held abroad. So if we look at those rules, that means that he rendered those services overseas and not here in South Africa.
Well, we will include it.
Yes.
Because he's a resident.
Yes. Correct.
And then
so this
that's where I end.
That's where you're ending. That's correct. There wouldn't be an exemption for the services rendered. And also because we said that he's a resident, he would be taxed on his worldwide income in terms of paragraph 1 of the gross income definition. So it's Roman number 1 of the gross income definition in section 1. Okay. Cool beans. So let's look at the solution. So our royalties would be included. Our interest from overseas would be included in full. There wouldn't be any exemption applicable because it's not from a South African source, so it's not going to be exempt. Our interest on fixed investment, the 20,700 would be included in terms of the general definition of gross income. Our dividends income, which is the 80% of the 20,000 rand, 20,000 rand would be included in terms of paragraph K of the definition gross income. And then our interest income would be in terms of paragraph I, which is the paragraph 1 of the definition gross income, and that's the 4,000 rand. Then the director's remuneration for services rendered would be paragraph C of the definition gross income for 24,000 rand. Then we would list our exemptions. All the interest is in terms of paragraph I. We would minus the 20,700 rand. Then our dividends in terms of section 10(1)K, we would exempt the 16,000 rand. Then the last interest that was received, we would first have to determine how much of our exemption is left over after exempting the 20,700. We would take the 23,800 less the 20,700. That would give us 3,100. So that means a portion of our interest would then still be taxed. So then we would minus the 3,100. Oh, I didn't give the total, sorry. You guys have calculators, so we are just trying to see the principle of the thing. So that's how
I'm a little lost.
Okay.
I can just go down the slide a bit. So the interest income, the way the total is 3,100.
Yes.
So the 23,800 is the limit.
Yes.
Okay. I see that. The 20, but is it because we've already deducted the 20,000? So okay, so the limit applies on all the interest that I would have received as a resident.
Yes.
Oh, okay. Yeah. Thank you. Understood.
So they look at all your interest income that you received from the South African source, and we will put it all together. If it exceeds the 23,800, you will be taxed on the amount in excess of the 23,800 rand. Okay. Cool beans. Is everybody comfortable? Are we happy? Great. Thank you. If I just see one thumbs up, I'm happy. Everyone then is spoken for. Great stuff. So then the second part of the same question, it tells us to calculate Rhino's taxable income for the 2024 year of assessment. They tell us that Rhino, who is 53 years old, is not and has never been ordinarily resident in the Republic. So that person is a non-resident, and we would be taxing them on source-based income. So everything of a South African source or anything from the Republic will then be taxed here in South Africa. He has business interests in the Republic and spends about 2 months a year in the Republic to look after his business affairs. Why is this information useful to us?
I think there's a certain number of months or days that you must be here or overseas. Yeah, but I can't remember from which section.
Okay, that's true. What else? There's another specific reason why they tell us about the business interest and the number of days that he's here.
Is it the physical presence test? Or the registered resident?
Yeah, you and Lerato are saying the same thing. I think it was Lerato who spoke just now. Yes, that's also important, because then that would help us determine whether that person is actually physically present here. But what other reason would they tell us about his business interest and the amount of time that he spends there?
Is it not because of section 10 IH, the local interest received by a non-resident?
Yes, correct. 10-1H. You keep saying I. 10-1H. Okay.
Sorry.
You're making me stress. 10-1H. Please. 10-1H.
I wrote I. The problem is I wrote I. Sorry. I'll
Please
fix my
correct it
mistake.
now. Correct it
And
now.
I
You'll be
corrected
studying-
it.
Thank you. You'll be studying the wrong thing and then you're gonna say to me, please, 10-1H. Okay. So that would be the reason why it's important for us to know. Because 10-1H is the more favorable exemption for non-residents for their interest income. There it tells us that if that person did not conduct any business and spend less than 183 days in the Republic, you can exempt it completely. But if that person has a business and he spent more than 183 days, or he spent more than 183 days in the Republic, then he would have to be, he wouldn't qualify for that exemption in terms of 10-1H. So in our situation, Rhino would not, qualify for the exemption in terms of 10-1H. So we can then look at possibly giving him an exemption in terms of section 10-1I. So if you don't qualify for 10-1H, we then go back to the normal rules of 10-1I. Okay. Then they tell us the following information is applicable for his 2024 year of assessment. They tell us that he had taxable profits from the Republic business activities of 120,000 Rand. What are we going to do with that one?
Are we not including it because it's from the South African source?
Yes, we are. We are going to include it because it's part of the income that is received from a South African source. And the section is Vincent. The section is
ten A.
No man. Come on. Go to gross
Is it
income
not now?
Gross income, section 1, paragraph 2.
Yes, thank you. So it's paragraph 2 of the gross income definition in section 1. Someone said it now. I'm not sure who said it, but you are correct. Golden star for you. So that is the section that we use, okay? So always remember that's our starting point. Paragraph 2 of the gross income definition in section 1 for non-residents, né? Okay, so that's how we will include it. Would there be an exemption? For the trade income that he has the business activities in?
No, I don't think so.
Thank
No.
you. Correct. So there wouldn't be an exemption. Okay. Then they tell us he had net taxable rentals. He has rental of 36,000 Rand from the house in Australia. How would we treat that one?
The one in Australia, we won't include, but the one in Cape Town, because it's a source from the Republic, will be included.
Correct. And my section is?
Hey!
Come on,
gross income section. Paragraph 2, section 1.
Thank you. So it's paragraph 2. Yes, paragraph 2 of the gross income definition in section 1. That is correct. Must be very proud of yourself. You see, you're getting it. Okay. So we know that there wouldn't be any exemption for the rental income, and they didn't tell us anything about his marital status, so we assume that the full 24,000 Rand would be included as part of his gross income. And then the house in Australia would be 0 because it's not from a South African source. Okay, Then they tell us that
Janelle?
he has income. Yes.
No, I wanted to say, by the time we're done with these classes with you, we will know the sections.
Please, doch, that will make me very happy. I'll be very
What
proud
if we
of you
don't
guys.
know them?
Huh?
What if we don't? What if we don't know them?
No, I'm saying it based on our interactions with Dineo when she reminds us, ask us. By the time we're done, we will know by force.
Yeah.
Keep it in your mind. You know, that's why I keep repeating the same things over and over.
I feel like we need a class just for the sections, you know, a full class for the sections.
Yeah.
There's so many sections.
I agree.
There's so many sections we cannot remember everything. Unfortunately, our minds can only take so much. So we try and remember what we can and hope for the best for the rest. The person who asked for the sections, I think it was Sipon, are you getting the sections? Because you're the one who said we must always have the sections. I hope you are satisfied. So then they tell us that he has income from a SA fixed property collective investment scheme. Then they tell us that it's not a tax-free investment and 100% was financed from out of interest. So the 8,000 Rand is interest income. How would we treat it? Margaret?
The full amount will be included.
Awesome. And then our exemption?
It'll be fully
And the
exempt.
section.
Oh, the section.
Awesome.
Oh my goodness. I can never remember the section.
Section 10.
Remember my
1I.
10I. Yes, the I. I must remember the I.
The I for the interest. Thank you. So we could also mention the fact that section 10(1)H would not apply because he has a business interest in South Africa, right? Yeah, so 10(1)I would exempt provision, okay? And then our paragraph 2 of the gross income definition in section 1 would be the reason why we are including it as part of our income, okay? Then they tell us income from a SA equity collective investment scheme, not a tax-free investment. 60% was financed out of dividends and 40% out of interest. How would we treat this one?
I want to guess.
Yes, please go ahead.
By the way, no, maybe not first by guessing, asking a question. If, by the way, the 25/45 is only used to deal with dividends from abroad, am I right?
Yes, correct.
So on this one, I think we'll apply, so we'll do it like the previous one where we will divide, you know, the amount, 18,000 will show the portion that is financed by a dividend, which is 60% of the of 18,000, and then we'll also have 40,000, so that when we do the exemption, we are able to know that this one, because the dividend one, we will not, it will be exempted. And then we'll only be able to focus on the interest, which is 40%. And then I can't remember when it's exempted, the 40%, how we do it, whether we do it with the, we reduce it from the, I can't remember how we reduce how we exempt the interest.
Okay. So yes, you're correct in saying that we are going to apportion between our dividends and our interest because we are including and using different paragraphs of the gross income sections, right? As we saw the last time, it was paragraph K for dividends and the normal definition of gross income for interest. But for non-resident, we will always revert back to the paragraph 2 of the gross income definition in section 1, right? Because that's the one that tells us that if it's from a South African source, we can tax it in South Africa. So then we would include both amounts according to the apportionment. And then our exemptions, can anyone try and help us out with our exemptions? Vincent has given us the gross income part. Can we get the exemption part?
For the dividend, which will be 10,000, is it 10,200? 60%, it will be fully exempt. And the interest is 7,000. Yes.
In terms of?
You want the section?
Yes.
Oh, okay. For dividends, it's section 10(1)(k).
Yes.
And for interest is section 10(1)(I).
Yes, thank you. Well
Yes.
done. So proud of you. And then how much of the interest would then be exempt?
It will be fully exempt because it's 7,000. Is it 7,200? I'm not sure about my calculation. Because the exemption for interest is limited to 23,800 because he's 53 years old. So it will be fully exempt as well.
Okay, awesome. So we would first take into consideration the interest that we've already exempt of 8,000 Rand, and then see if there's going to still be enough to exempt the full amount. In this case, there would have been enough to exempt the full amount of 7,200 Rand. So there wouldn't be any portion of it that's actually being taxed. So in actual fact, his taxable income will only be on the business activities as well as the house in Cape Town. So let's look at our solution. Taxable income from the business, we said because he has taxable income from a business or he has a business activity, he wouldn't qualify for a 10(1)(h) exemption for interest income. So that just helps us to know that when we are doing our interest income exemptions, the person won't get the benefit of getting the full exemption or the full amount exempted, but it would be limited to the 23,800 Rand. So we would include it in terms of paragraph 2 of the definition gross income, the full 120,000 rental income, not from a South African source, so nothing would be included in terms of the same paragraph. Rental income from the Cape Town property, we would include it because it's from a South African source. Still looking at our paragraph 2, definition of gross income. The interest income from the equity collective investment, we include in terms of paragraph 2, the 8,000 Rand. Then the dividends, the 60% for the 10,800 Rand, we would include in full. The interest portion, the 40% would give us 7,200, we would include as well. Then we go to our exemptions. We would exempt our interest in terms of section 10(1)(I) because they don't qualify for 10(1)(h), which is the more beneficial one because you would be able to exempt everything. But they were fortunate because their interest income was less than the 23,800 for the year. So we would give them the 8,000 Rand exemption in terms of 10(1)(I). Then the dividends income, they would qualify for an exemption in terms of section 10(1)(k), and that and then the interest income, we first need to determine if the interest exemption of 23,800 will be sufficient to exempt the full amount, or would there be a portion that's still taxable. But in this case, they would be allowed a full exemption on the 7,200 Rand. So their taxable income will be 144,000 Rand. Okay.
No, I think the issue is that is really killing some of us is when you have to make reference to, you know, the sections. I think there are so many. I don't know if, you know, there could be a legend or something that, you know, can make it easier, because I'm thinking that, you know, as we were doing the referring to the section, I tried to open my textbook, but it's very difficult, you know, to looking at, you know, where is section 10 1I or one section or whatever section. So I don't know, maybe from your very old, you know, notes, you might have, you know, a tutorial that, you know, sort of guide, just like, you know, the appendix that we have, you know, at the that we receive when we write exam, where, you know, there will be certain things that, you know, would be given. You don't need to crack your skull, you just refer to them. So even with these sections, because remember, almost every section or every chapter, it has hundreds of, you know, references to, you know, the act. And I'm sure those who are working at SARS, they have probably a database of, you know, where to check. So yeah, I don't know whether it's possible, because hey, that's one challenge. But you'll find that even if you wrote an exam, you'd get 0 for the sections, because you'll be quoting, you know, you just saw section 10, and then if the lecture feels that I want section 10 1I, then you're out. Thank you, T.
All right, thanks, Vincent. I understand your worries completely. I think even when the tables were turned and I was in your situation as well, trying to remember the sections, it's very difficult. I wish there was a legend. I don't have a legend. The ones that I know, and I know them well. So that's my advice to you as well. Know the ones that you know well, so that you can quote them in your exam. At least if you have like a general idea of where you would look. If you can just say gross income, general definition of the gross income, at least then they would know, oh, okay, at least this person has an idea of where the sections are. If the marker is lenient, then they would give you the mark, I guess. But if not, then it's tough. So try and find a rhythm for yourself of how you memorize information. Unfortunately, I don't have a legend. I wish I did. I would give it to you so that you can use that to like cram everything. I don't have one. Try and see how you study best and apply that in your studies for tax. Sorry, I can't really like do much more, but the more we discuss it, I think the more you will get to understand it, or you'll get to remember it.
And this is just my comment, maybe to Vincent and my other colleagues. So as I was studying, I was noticing that some of the material or some of the learning units, the questions either were compiled including silk, or parts of it were referenced to silk for some reason, and this is just my personal thing. So I went and I purchased a silk book. It's so much better in terms of the flow, in terms of the explanations, than the obviously the kind of mandatory textbook, that the LexisNexis one. So, and also then silk also summarizes it very nicely. So as you're saying, it will look at maybe chapter 1, whatever it is, and then as much as it's explaining in terms of text, but there are summary tables literally set up with the section or the, I think, well, the reference to text and the sections and applicability. So I don't know if if you can borrow a book from a library, or even like an older version, just to get the context or to understand the I guess the theoretical part, just making sure that you don't confuse yourself in terms of the numbers if it's outdated. But that's what's helped me. And so every chapter I study, I just go and reference that, and then I look at the summary of, okay, this chapter or this part of text specifically speaks to these two sections. So it's only going to speak to section 9 or section 10. And I don't know if it then is going to if I, then like I said, I don't know if you get a half a mark if I just say section 9 or if I say section 9H, you know, like what the difference is in terms of marking. But I'm assuming that if I say section 9, I'm in the area of like in terms of understanding, I may just not know if it's an IH or A. Then maybe there's a half a mark applicable there, but I'm not going to lie, silk is the one.
Thanks for sharing your experience. So maybe you can try that.
Magdalena wrote something on the chat. Anissa, please ask.
Ask me. What did you say? Please share the slides for the class. Okay.
No. You know, remember when I spoke about the section?
You know what, Ne? I think as we go on and as we're covering more topics, we will have more things to add on to our list. So maybe we can, as we are working together, we will actually end up having that ledger that you are referring to, Vincent. So the more we cover the topics, the more we will have specific sections to add on to our little ledger to help us remember.